Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, debt, more debt, and why not a little default too? US leaders can't agree on how to cut the $14 trillion debt as a deadline looms, while Italy emerges as a new flashpoint as ministers try to stave off disaster for the euro. Also peering into the muddy waters of investing in China. An oddly named but controversial website casts more doubt over the Red Dragon. And long live the checkbook, a supposedly outdated way to pay, gets a last-minute reprieve from Britain's banks. All that plus more from the Copa America football in Argentina. But first, debt, a word we've probably used more than any other this year on Counting the Cost, because on the face of it, the world does seem to be sinking in a sea of debt. We'll show you the numbers from Europe in a moment, but first the United States, where the argument is over $14 trillion worth of debt. If there's no political deal in the next 2 weeks, the world's biggest economy will default. Now, at the best of times, no one likes indecision, but two ratings agencies, Moody's and Standard & Poor's, decided to voice that dislike by putting America's treasured AAA rating on review for a possible downgrade. That hit the dollar and sent gold to a new record high, which goes to show you how powerful the ratings agencies are. If they say the US is in danger of defaulting and will be downgraded as a result, then people tend to sit up and listen. Although, have a quick listen to this counter-argument from someone who thinks the credit ratings agencies should really be called discredit agencies.
And this is really the big problem with the ratings agencies. They make systemic problems worse. And in fact, they actually created the systemic crisis in the first place. So there is a need for a fundamental shift away from what I prefer to call the discredit rating agencies. We're in a systemic crisis, and if you have organisations like Moody's and S&P coming out and giving somebody a decline in their ratings during a systemic crisis, it makes the systemic crisis worse. And really, they fundamentally are making this, they created the problem in the first place by rating junk bonds as AAA, and now they're turning a systemic downturn into a worse one, and they frankly don't have the brain power necessary to give us an alternative.
Regardless of your opinion, though, they are influential, and the ratings agencies have been involved over in Europe too. In Ireland, Moody's actually cut the country's debt rating to junk status, warning it may need a second bailout. The European Commission, though, has criticised that downgrade, saying Ireland is returning to growth and meeting all the requirements of its initial bailouts. You've got Italy, where the national debt of Europe's third biggest economy now stands at $4 trillion. Servicing that will require $576 billion by the end of the year. The Italian Senate has passed a tough austerity budget, but policy tensions between Silvio Berlusconi and his well-regarded finance minister, Giulio Tremonti, are unsettling the markets as well. And of course, Greece bubbles along too, though bubbles is maybe a too light a term for what's going on there. European finance ministers had to meet again in Brussels to talk about another bailout for Greece. The second package of loans to Athens is expected to be around $176 billion. Now, what we are conscious of here is throwing a whole lot of numbers at you, most of them in the billions, if not trillions, and that not really making much sense. It does boggle the mind for sure. So here's Gerald Tan to explain the case of Greece, which is forecasting $502 billion in debt this year. What does that look like? Watch this.
This year is a crisp $100 bill. It's the largest US denomination currently in general circulation. 100 of these, and I have $10,000. A nice wad, but I'm not really trusted with this, so let's just keep it somewhere safe for now. Well, what does $1 million look like? Sadly, I wasn't able to raise that amount of cash, so we begin the visual trickery. To scale, this little pile here, believe it or not, makes me a millionaire. Pretty underwhelming, isn't it? So let's step it up. $100 million, the value of a large corporation, for instance. Now we're talking. Look at it, it fits into an industrial pallet, comes out to about just half my height. 10 of these, and we have $1 billion. You're now looking at what's equivalent to the goods and services produced by the nation of Samoa in a year, which brings us to the Greek national debt, forecast to hit $500 billion by year's end. This is it, and what I look like alongside it. Talk about a sea of money, 5,000 pallets, each containing $1 billion of notes. This is how much Greece has borrowed and now owes to other people.
Yes, so mountains of debt all around, and investors won't have been reassured by what Moody's was saying on China either. A couple of weeks ago, the ratings agency warned that Chinese local authority debt was higher than published. Now Moody's Investors Service has issued a warning on Chinese companies. It says 61 rated Chinese companies are engaging in potentially risky business practices. That helped send stocks in Hong Kong to the biggest two-day drop in 18 months. So let's hear from Beijing. William Hess, Managing Director of China Analytics, an economic advisory services firm serving multinational clients. He's also a former director of Standard & Poor's, with us now. Mr. Hess, let's deal first of all with what Moody's is saying about China. The issue of debt, which did rear its head a little while ago. We saw the local government debt numbers out. But when Moody's comes out and says there's trillions more in additional debt, how much of a red flag is that?
Well, I think in general, the context is that many people thought that China was not a problematic credit story. And now that growth is slowing down, now that growth in money supply and credit are slowing down, that a lot of things are exposed. So I think the numbers themselves aren't really as scary as really the idea that China could be the next credit bubble. And certainly there are pockets of the economy where that could be true. So whether it's bonds, whether it's bank loans, or whether it's just supplier credit, so intercompany credit between firms that supply big SOEs, for example. These are things that people really assumed to be low risk. But now I think that given what's happening in Europe, people are really taking a harder look at the China story.
And how does the Chinese government react to this? Because I guess it would point to the fact that, it has trillions of dollars worth of reserves and that all of this should be easily controllable.
Well, certainly it does. You would think that it does. The Chinese government does have the firepower to really deal with this issue, but coordinating the bureaucratic and administrative resources to do so is really a complicated task. So, on an absolute level, certainly the Chinese government's balance sheet does show the resources to deal with this kind of problem. But they don't want to create the same kind of incentives that led to this problem in the first place. So if people are going to think that they're going to be bailed out, especially local governments, whenever they go on a borrowing binge, they don't want to see this occur again in 10 years because their story has been, to the West anyway, and to the media, that China is a safe case, that they didn't have the problems that the West did in the banking system. And clearly that's not really true. So their response is first to get a handle on the problem, because I don't think they had an accurate one to begin with. And second, I think they're in a stage now where they're trying to figure out what to do and how to get the resources together to actually do it.
So in your view, and from the analysis that you do, can this be turned around? If I use a rather odd analogy here, China's like a really big ship and it's moving very, very quickly. And when you need to turn around such a fast-moving ship, it's going to take quite a bit of work.
Yeah, I think another analogy that I kind of like when talking about this is from Warren Buffett, talking about when the tide goes out, that everyone gets to see those people who have been swimming naked. So I think there are some naked swimmers in the Chinese economy, and local governments and their financing platforms, I think, certainly fit the bill. Now, this goes back to the Moody's report and the subject in general, that even though there is a lot of credit there that people previously couldn't account for accurately, it doesn't mean that it's all bad. There will undoubtedly be a significant volume of bad loans created by a more accurate accounting for local governments and for other platform borrowing. But some of it can be worked out and some of it can't. So I think it's going to take a little bit of time before we really get a clearer picture about the scale of credits likely to default, in addition to the absolute scale of the credit out there to these kinds of entities.
Okay, William, let's just pause there, because I do want to introduce another element to this story. While Moody's was raising these red flags on Chinese companies, so too was another firm which has suddenly become very well known. It's called Muddy Waters Research, and it's actually cost some of the biggest investors on Wall Street a lot of money. For example, this man, one of the richest men, John Paulson, in the States, he lost around $110 million when he dumped all his shares in a Chinese company called Sino-Forest. That was because of a scathing report from Muddy Waters accusing Sino-Forest of aggressively committing fraud and being a pump and dump scheme. Now, why Muddy Waters? Well, the website says the Chinese have an old proverb: muddy waters make it easy to catch fish. In other words, murky finances creates opportunities to make money. But Muddy Waters is itself accused of being involved in some murky practices, things like selling shares in a company just before it accuses it of fraud. No reply, though, from Muddy Waters when we asked for an interview. But if we go back to William Hess, who's still with us in Beijing, when you've got a group like Muddy Waters putting out research which essentially says buyer beware, but it has a huge knock-on effect, what does it tell us about the fear factor with China? That there are now established and these more maverick operators, if you like, out there warning us about China. Is it possibly a backlash thing, a bit of sort of scaremongering?
Well, I think that the very strong reaction to Muddy Waters' comments reflects both the state of the markets, that they're very jittery, that any bad news, people are looking for an excuse to sell out or to change their model of the China story right now. But I think things may, in some pockets, could correct. The markets in some areas could be oversold as a result of this, and it's going to be I think a period of reassessment where there are going to be firms that are going to be found out to be bad cases, but there are others that are going to be hurt by this news more generally, and the trend more generally, but could also benefit on the upside when investors take a better look at those companies that can back up their financial performance and show that they're immune to this kind of short selling. So Muddy Waters does serve I think in the end a good function right now, and I think more firms will come out with more skeptical and critical looks at Chinese companies, and not just sell the concept, but look at the cash flow and look at the substance of the companies behind them.
Seeing as you live and work in China, I'm interested to know the reaction from Chinese business people and economists. Forget the government. You know, when this sort of negative news comes out, is it like water off a duck's back because they know that in the end they've got the fire to back it all up? Or does it have an impact internally on the business people?
Well, there's always a question of what you can see and what you don't see, and I think this is causing a lot of analysts like myself to look at the rocks that we haven't turned over to see what might be lurking underneath. So I think that the China story has been one of unconditional growth, and so now as the economy starts to slow, as credit controls bite, I think people are taking a harder look at which sectors may be affected most, which kinds of companies may be affected most, and based on where we are in the cycle and on the policy stance, those companies that may get caught short. And so I think this is really a period of readjusting expectations for China still as a strong grower, but in a different mode going forward, and trying to pick out which areas are set to take advantage of that, because the past is probably not going to be like the past 10 years.
All right, William Hess joining us there from China Analytics this week on Counting the Cost. Thank you, William.
Thanks very much.
And still to come here on Counting the Cost, we're at the Copa. Along with the dancing girls and the fanatical football fans, of course, but are all Argentinians cashing in from Latin America's biggest tournament? That is still to come. A simple question now, though. How do you prefer to pay for things? I guess it'll always depend on the situation, how much you actually have to pay at any given time. But what we want to do for this next story, just before we get into it, is lay out an average wallet and look at your options. First of all, of course, you've got cash. Cash is king. It's the most easiest and obvious way to pay for things. You've got a debit card, spend the money which you have got electronically, or indeed a credit card to spend the money you haven't got electronically, on the proviso that you will, of course, pay it back. There are online options. You've got PayPal here, for example, which is probably the easiest way to make online transactions. And then there's this thing, the humble checkbook. You write it out, you sign it, you post it or hand it over, and you wait for the money to leave your account. Now imagine life without your checkbook, because that is what the UK government was proposing. It wanted checkbooks phased out by the year 2018. That was until a huge public backlash caused them to scrap the plan. It seems people in the UK at least still want this option, even though the use of checkbooks has been declining for years. In fact, 20 years ago, 4 billion cheques were written in the UK. That was the peak. Last year, it was just over a quarter of that, 1.1 billion. So it is clearly an industry in decline. But consumer group Which conducted a survey last December and found half of the over 1,300 people surveyed had written a cheque in the previous month. Well, David Ward is a member of Parliament for Bradford in Northern England who campaigned to keep the cheque, and he joins us now from outside the Houses of Parliament in London. Mr. Ward, thank you for your time. What is it exactly that made you go into a bat for a 350-year-old practice of writing a basic cheque?
Well, there's an even longer practice of using coins, but I don't think we're thinking of getting rid of coins. The reason that I got involved in this campaign is simply because I had an opportunity for a private member's bill. We looked around for an issue that many people felt very strongly about, and it seemed a great opportunity to take on the Payments Council and indeed the banks, who were very keen to get rid of the cheques against the interests of literally hundreds and hundreds of thousands of people who continue to want to use cheques.
Yeah, but to play devil's advocates here, in favour of the banks, I should say, they would say 20 years ago we were cashing 4 billion cheques a year. Now we're down to 1 billion cheques a year, so the facts speak for themselves. Fewer and fewer people are using cheques. A phase-out had to happen.
Well, 1 billion sounds a big number to me, and you know, you're talking about 4 million. It's more than a billion actually. It's 4 million every single day over these cheques are still used by people. But also, what's really important, Kamal, is who uses these cheques, because it tends to be vulnerable groups, people who don't have anybody speaking up for them. It may be the elderly, it may be charities, or it may be small businesses. And so although the numbers has declined in use, we understand why people are being paid directly to the banks. There is still a fundamental need and for many people to use cheques. It is their preferred method of payment and should be retained.
I'll tell you something interesting I read though, Mr. Wood. It's from the Cheque and Credit Clearing Company, which manages cheque clearing systems in Britain. On their own website, they are asked why are many retailers no longer accepting cheques, and they have said none of them would be making this decision if they felt they would lose customers or business, and so the deciding factor must be that so few customers are using them. So again, Mr. Wood, we see it there from the company itself. The proof's there.
Well, what's happened is it's become a self-fulfilling prophecy by the banks, and then that leads on to the retailers, because if the banks, and this was my criticism, if you specify an end date, then what happens is that retailers and many others start to stop using cheques as a method of payment. So this isn't a result of customers who don't want to use them. It's a result from big businesses, big companies, big retailers and the banks who are wanting to get rid of it, not the customers themselves.
Okay, so then we have to look at alternatives for the future, don't we? Because even though the Payments Council has said cheques will continue, and this are their words, as long as customers need them, this argument may come back in another 5 years, or another 10 years, or whenever. So shouldn't we be looking at some real alternatives to a paper cheque?
Well, yes, please do. That's what we were expecting from the Payments Council. This was looked at a number of years ago. They came back with a retort quite confidently, we can provide alternative methods of payment, and they have failed to do it. The sad fact is, from their point of view, they cannot find a suitable replacement for a method of payment that is still wanted by many people. Let them come up with the alternatives, but until they do, they should not specify an end date. And I would argue, Kamal, it should not be the banks that actually make this decision at the end of the day. So although we're delighted that they have decided to go back on their intention of getting rid of cheques in 2018, we still want to make sure that banks are promoting, not just accepting, but promoting the use of cheques, because again, banks have actually been dissuading people. It's very difficult often to get a chequebook when you open a new account, because the banks themselves want to make this, as I said, a self-fulfilling prophecy that it would be in decline. But let them now not only accept them, but promote them as a method of payment. Many people still want to use them.
Just a final thought from you, Mr. Wood. What do you know of other countries? In your research and in your promoting of the chequebook at home, have you come across any other places that are particularly attached to writing out a cheque, as Britons seem to be?
Well, what they've tried to do in other countries is to look for alternatives, and they've often come up with replacements which are in effect paper-based replacements. Well, that's a cheque surely, but also in countries like Belgium, for instance, where they sought to get rid of them. What they did notice was that there was a very large increase in cash transactions, and that was something that concerned us, that if you withdraw cheques as a method of payment used by many of the elderly, then you would possibly be finding that they would be holding more cash on their premises, which of course is very dangerous.
British MP David Ward there. Pleasure talking to you. Thank you for your time on Counting the Cost.
And you, Kamal. Thank you.
And from checkbooks to a bridging loan, perhaps. A new $7 billion earthquake-resistant bridge over San Francisco Bay, which is actually, if you like, a Chinese takeaway, because the steel's been made in Shanghai and then shipped across the Pacific Ocean, much to the dismay of the Steelworkers Union in the United States. Here's Melissa Chan looking at the results of outsourcing.
Some 3,000 Chinese workers have been working more than 3 years here. This is the largest steelmaking site in the world to produce the new San Francisco-Oakland Bridge. Now, commissioning the project here in China has meant that California has saved hundreds of millions of US dollars, certainly on labor costs, but because China is the largest steel producer in the world, it certainly means the country here has plenty of experience on mega projects like this one. An entire factory was set up just to manufacture the American bridge. The operation was completely dedicated to this one mission. This has been a big deal for Shanghai Zhenhua Heavy Industries, the Chinese company. Its first foray into bridge building, but if there's any worry over the Made in China label, well, representatives from the American side have been on site auditing the entire project.
I'm completely comfortable. If there's an earthquake, I want to be on this bridge. There are a lot of things in the Bay Area that are a lot less safe than this bridge is going to be.
And the California deal has led to other contracts, bridges in Norway, Denmark, Scotland, South Korea. It's very exciting for all the engineers here.
We have the ability, both in hardware and software. We put together all the equipment, set up the facility. An entire pier was built just for this project.
American workers will put together the pieces, but this is definitely a Chinese bridge. These are the last 2 steel bridge segments, and then it'll be off to San Francisco.
Finally, this week, more from the Copa America, the biggest football tournament in Latin America. Now, in between watching matches, Rahul Pathak's been looking at the economic impact for us, and it wasn't looking so great for a while because the host nation Argentina wasn't doing so well. Now, though, they're winning matches. It's a big boost for both the fans and the economy, not just in the capital, but nationwide.
After 24 years, the Copa America has returned to Argentina, and the host nation, it seems, is determined to enjoy itself. A lot has changed since the last time the Copa was held here in 1987. Football is now big business, and when the biggest player in the world is Argentinian, you can be sure the hosts are going to do their best to cash in. The organisers of the Copa America want to see lots of fans coming to the matches, spending their pesos or dollars. And one thing that they're really looking to see is fans from the other South American countries, especially Chile and Brazil, where the exchange rate in those countries make Argentina a very attractive place to come to. They're wanting those fans to come to the Copa America and spend their dollars and give this country's economy a real boost during this month of football. Well, taking the tournament around the country and away from the football heartland of Buenos Aires is a risk, but it's one that seems to have paid off so far, with large numbers of people coming to the matches in cities like Santa Fe, 476 kilometres north of the capital, giving the local economy a much-needed boost. But this being election year, there is a political element to all of this as well.
It's more a political than sports decision. It is about spreading football around the country, but many of the games are going to provinces governed by people from the ruling party.
Another added element to this year's competition is the interest from abroad. The trickle of South American players to the big leagues of Europe, especially England, Spain and Italy, has now become a flood. It means the worldwide TV audience for the Copa America has made the tournament a more attractive proposition for advertisers.
That's why the Copa America is attractive. As a result, it's watched in Spain, Italy and Asia, as well as Mexico. Messi on his own is a big enough brand to sell the Copa America by himself. People want to watch him anywhere in the world.
So the Copa America, a large cash cow to the Argentinian economy. However, very little, if any of it, will find its way here. These are the slums of Buenos Aires, known as the Villa Miserias, and they've produced some of Argentina's greatest footballers like Maradona and Tevez. Juan Domingo Romero runs a community radio station here. He says the financial windfall of the Copa won't be felt in the slums.
It's a tourist attraction. It's not meant to help us. What they should do is use the money to subsidize other things, other projects in the slum.
So as ever with big international tournaments, there are some that will miss out on the financial benefits, but the passion and enthusiasm for the Copa America in Argentina will be there no matter where you are.
And that is about our lot for this week, but there is always Counting the Cost online, where we put all our shows up for you to watch again at your convenience. You get there from the main page at aljazeera.net/English. Then you hit the business tab at the top and link on to the Counting the Cost page. And then, to get in touch, you hop on Twitter at KamalAJE is where you'll find me to ask a question or suggest something we should look at for a future show. Do get in touch, we love hearing from you. But that is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.